Hello, and welcome back to Explain the Charts, your go-to channel for detailed technical analysis. Today is November 20th, 2025, and we're taking a deep dive into Amazon, symbol Amazon, which has been making headlines for a lot of reasons lately. The news cycle has been a roller coaster. Just 10 days ago, on November 10th, we saw reports of Amazon hitting an all-time high. However, the sentiment has shifted dramatically since then. Recent news from Forbes suggests a potential 30% downside risk for the stock, citing concerns about an AI bubble. This is compounded by reports from Investors Business Daily and AMZN that Amazon stock slid below a key level following a bond sale and a notable analyst downgrade. The downgrade, from Rothschild Redburn, moved the stock from a buy to neutral with a $250 price target, citing concerns over the high capital intensity and weaker pricing power of generative AI. Adding to the pressure, the European Union has designated Amazon as a critical technology partner, which brings it under more aggressive regulatory supervision. So we have this potent mix of a recent all-time high clashing with a wave of bearish news. Let's turn to the charts to see how this story is unfolding in the price action. Looking at the daily chart, we can see the broader context of AMZN's performance over the past year. The stock showed incredible strength, pushing up from a low of around $161 in April to an all-time high of $258.60 on November 3rd. That peak is now our key long-term resistance level to watch. Following that high, the stock pulled back, then made another push, which aligns with the news of an all-time high around November 10th. However, the past week has been brutal, and you can see the direct impact of the negative news I just mentioned. We see a series of large, red candles starting around November 13th, showing a rapid decline from over $244 to where we are now, trading around the $222 level. This sharp sell-off has brought the price down to a critical area of potential support. If we look back to late September and again in late December of 2024, this $220 to $225 range acted as a solid base of consolidation. This zone is the market's first real test on this downturn. If this level fails to hold, the next significant area of support doesn't appear until we get down towards the $210 to $215 zone. Now let's zoom in on this recent activity by filtering our daily chart to start from the end of October. Here you can see the massive gap up on October 31st, likely on strong earnings news, which propelled the stock to its all-time high. Notice the significant volume on that initial push, showing strong conviction from buyers. But contrast that with the price action of the last 5 trading days. The candles on November 13th, 17th, and 18th are large, bearish candles accompanied by elevated volume. Heavy selling volume like this confirms that institutions are likely exiting positions, which gives weight to the bearish news catalysts. This is not a quiet drift down, this is an aggressive sell-off. The price has sliced through several minor support levels on its way down, indicating strong bearish momentum. Yesterday's session on November 19th closed near its lows, showing sellers were in control right to the end of the day. Let's switch over to the 1-hour chart to get a better feel for the short-term trend. Here, the bearish pressure is even more apparent. We can see a steep, unrelenting downtrend over the past several days. The price is currently attempting to find its footing and is moving sideways in a tight consolidation pattern right on top of that key $222 support level we identified on the daily chart. This coiling of price action after a big move is significant. It can either be a pause before the next sharp move down, forming what's known as a bear flag, or it could be the market building a base for a relief bounce. For traders, the boundaries of this consolidation are key. The recent low around $222.42 is the immediate support to watch. A break below that with volume would signal the continuation of the downtrend. On the upside, resistance is forming near the $224 to $225 area. A convincing move above that level could trigger a short-term bounce. For an even closer look, let's drill down to the 15-minute chart for the last couple of trading sessions. This time frame is crucial for day traders looking for entry and exit signals. Here we can see the sharp drop on November 18th, followed by the choppy, sideways price action of November 19th. The market is clearly in a state of indecision in the very short term. The key micro-levels are the session low at $218.52 and the session high around $223.73. These levels define the immediate playground for intraday traders. A break of the low would likely attract more short sellers, potentially targeting levels closer to $215. Conversely, if buyers can push the price above the high of this range, a quick long scalp trade could be viable, aiming for the next resistance level around the $225 to $228 zone, which was the support level before the most recent breakdown. Alright, let's switch back to the daily chart to recap and look ahead. The situation is tense, with bearish news providing strong headwinds. Let's summarize the most important price levels. Critical support is the current zone of $220 to $222. If that breaks, look for potential support at $210, and below that, the major psychological level of $200. On the upside, immediate resistance lies at the $225 to $228 area. Above that, we have resistance at $235, and the ultimate ceiling is the all-time high around $258. Now for some potential scenarios. I believe a bearish scenario has about a 65% likelihood right now. The combination of negative news catalysts and the strong downward momentum makes further downside the path of least resistance. A break below $220 in the coming days seems probable, especially if we get more negative headlines about AI costs or regulations. The bullish scenario, which I'd place at a 35% likelihood, depends entirely on the $220 support level holding firm. The stock is becoming short-term oversold, so a relief bounce could materialize. For this to happen, we would need to see selling volume decrease and for price to reclaim the $225 to $228 resistance zone. Long-term investors might view this as a discount, banking on Amazon's fundamental strength to overcome these short-term fears. Keep an eye on any company statements clarifying their AI spending strategy, as that could be a major catalyst. That's our analysis for today. Thank you for watching Explain the Charts. Before you go, please remember that this video is for educational and informational purposes only and should not be considered financial advice. Always conduct your own research and due diligence before making any investment decisions. Trading involves risk, and you should never invest more than you are willing to lose. Don't forget to like and subscribe for more content.